Joining us now live to provide more insight is Don Drummond, former chief economist at TD Bank. Don, thanks so much for joining us on CTV News Channel. Firstly, what are you expecting the Bank of Canada to do coming up this week on Wednesday?
I'll go with your call if they're going to hold it, but we could easily write the press release for either one. If they hold, they're going to say, well, the growth was pretty good in the first quarter. There's a lot of uncertainty. We're going to wait and remind everybody we're at the midpoint of our neutral rate. We're not breaking the economy. We're not stimulating the economy, but we're not breaking the economy. And those pesky underlying inflation numbers, so those three measures that the Bank of Canada watches all the time, they're between 2.5% and 3%. So that would be the argument for holding. If you want to flip it around, though, we've had 3 months of weak employment, a couple of months of a decline, very small increase, an awful lot of uncertainty. Apparently, we're going to wake up that day of the setting and have our steel and aluminum tariffs doubled or not. All kinds of reasons you can justify a decline, but I think given the uncertainty, they'll probably hold it. And we have to keep in mind the rates are already pretty reasonable. It's not like we're at 5%. We were a few years ago. The rate's at 2.75, mid-range of neutral.
Yeah, so as we mentioned, the economy has outperformed expectations to this point, but there's still the looming threat of economic uncertainty, of course, coming out of the White House. How does the bank now try to balance all these data points it needs with so much uncertainty?
Well, as the governor has gone to great pains to explain, he cannot save Canada from this tariff threat. They can lower the interest rate somewhat, but they're already low. It's 2.75. I mean, in the limit, they could go down to a quarter the way they were a couple of years ago, but that wouldn't necessarily lower the long-term rates, and that's what determined the mortgages rate. So there's not an awful lot, unfortunately, the Bank of Canada is going to do. That's going to be more an industrial policy, trade policy, and the like. That's more the government of Canada, and we're meeting the premiers.
Yeah, so as we've been talking about, if the bank decides not to cut interest rates and holds at this point on Wednesday during the announcement at 2.75%, in your opinion, what's the likelihood of one or potentially several more cuts at some point this year?
It's all going to be conditional what happens from the White House down below. And you've got to bet it's going to be more chaos. I think it'd be pretty foolish to assume that the chaos is going to end anytime soon. So if we continue to get this destructive policy, destructive to the U.S., destructive to Canada, destructive virtually everybody in the world, yes, I think the Bank of Canada will cut further. If the nonsense ends, and I wouldn't put a lot of money on that, then perhaps not. Again, this is where they want it. They wanted around that 2.75 range, and they're not too happy with the inflation, the underlying measures not coming all the way down to that 2%.
Don Drummond is the former chief economist at TD Bank. Don, greatly appreciate your time breaking it down today. Thank you.
You're welcome.